Hello everyone. Today we are going to study one of the very important standard, that is CAS 8, that is revised 2017, effective from 1st April 2010. Cost accounting standards on cost of utilities. So what is utilities? Before starting further, first we should know what is utility. So utilities are certain ingredients or elements which are used for production process, but they do not form part of final output. Like example, power, steam, water is the most essential product of the production, but they do not form part of the final output. So that means any supporting elements that is used in manufacturing process and not become part of the finished products. That is a utility. With reference to CAS 8, one of the main point also is there. CAS 8 is not applicable on who are manufacturing these utilities, like power company. So this CAS 8 is not applicable on power generating company. This CAS 8 is for whom who are consuming or using in these utilities in their production. So this CAS accounting standard is for them. As for them, it is a cost, because they are consuming and they are using for the final output. So identifying that cost, this CAS accounting standard 8 will be used. So these are the objective and scope. You can read. These are the important definitions. I want to discuss with you all. What is utility? We have already discussed. Standby utility. Any utility created as a backup against any failure of the main source of the utility. Like electricity. Electricity is one of the main utility without which no manufacturing can take place. So backup is like when supply of electricity is cut from back end. Then what's the backup for the manufacturing? Most of the manufacturing company will keep generator inverter as an backup so that work doesn't suffer. That is called standby utility. You can also say that this standby utility is a safeguard against the failure of the main source of the input. If power has been cut off, then this is the backup standby utility. So this is the standby utility. Then cost of utility, committed cost is the cost of maintaining standby utility shall be the committed cost. Fine. Interest and finance charges are the interest and other costs incurred by an entity in connection with the financing arrangement. Right? Then principle of measurement. Principle of measurement is also tells us what is included or not included. Through principle of measurement, we only get to know what about the costing. So first point says that each type of utility shall be treated as a distinct cost object. Distinct cost object. So CAS accounting standard says whatever utilities, whether if it is for water, steam, electricity, they are the cost object on which we have to do our costing in as per cost accounting standard 8. Next is point number 2. The point number 2, 3, 4, 5, 6. I just made a table against it to better understanding and simple understanding. Like point number 2 says cost of utility purchase. That is, if you are purchasing a utility from outside, then the simple cost will be cost of purchase, duties and taxes, transportation cost, insurance cost, other expenditure directly attributed to procurement, net of trade discount, rebate, tax and duties and refundable or to be credited. These are the cost of utility should be added in the preparation of total cost at the time of preparation of cost sheet. Point number 3 says cost of self-generated unit for own consumption. That is, if we are generating the utilities within our own premises or factories, self-generating our utilities, then there will be cost will be direct material cost, direct employee cost, direct expenses, and factory overheads is a will be the total cost. And the point number 4, 5, 6. Before reading it, let's understand this small diagram with reference to point number 4, 5, 6. If there is a paying company, that is parent company, is having two subsidiary company, company A and company B. Company A has two divisions, that is division 1 and division 2. Division 1 works for the generation of steam utility. Division work is generating steam. So division 1 says that if division 1 is transferring its steam to division 2, that is within a division, that is just called inter-unit transfer. After transferring the inter-unit transfer, some steam has been left. Then they decided to transfer to intercompany, company A to company B. Company A division 1 will be transferred to company B. That is from that you can say company to company, intercompany transfer, because division 1 is coming under company A and company A is transferring to company B, or division 1 is transferring to company B. That is called a intercompany transfer. Same if there is any company C outside or unrelated company, you can say this is, and division 1 is selling to the outside unrelated party, that is outside the parent entity, that is called as sale to outside party. So this is our point number 4, inter-unit transfer. Point number 5 is intercompany transfer, and sale to outside party is our point number 6. So let's discuss on that. Cost of utility generated for inter-unit transfer. So here the cost will be cost of self-generated utility, that is a direct material cost, direct employee cost, direct expenses cost, factory overheads. In addition to that, there is distribution cost incurred for such transfer. Obviously, there will be a distribution cost. If you're transferring from one unit to another, then there will be a definitely distribution cost there, and that should be added into a total cost. Point number 5 says cost of utility generated for the intercompany, that is related party transfer. So these are the 1, 2, 3, 4 are the points. That is point number 4, we can say, where the direct material cost, direct employee cost, direct expenses, factory overheads, and distribution cost has to be there. Plus, in addition to that, there is a share of administration overheads. Now, what is the share of administration overhead? Where it has been come? So let's go back to our diagram. Like if we are transferring from in division 1 to division 2, then they are the inter-unit transfer. If we are transferring from division 1 to company B, that is company A and company B. Company A has its own administration cost, administration overheads, but the company B is also having its own overheads. So they are both are different entity. So but they are coming under parent company, but they both have different administration, and they both have their own administration overhead. So while transferring from one company to another, you have to add another element, that is administration overhead, and both company A and B are different from them. Hence, you have to proportionate the amount of administration overhead which included the transfer from one company to another. Both company has different administration. So both company has to add administration overhead accordingly. So point number 6 also says cost of utility generated for the sale to outside party. Simple. These are the all are same. Sorry. Till here all are same. All are the same cost as per point number 5. In this it has been included addition of there is marketing overheads. So why marketing overheads? Because it's selling to outside party. If that there will be a situation where company P has an excess steam on which company has spent some expenses on marketing overheads before selling to company C. So marketing overhead should be added for calculating the cost of sale to outside the party. So this is the total. We'll get the cost of utility generated for the sale to outside party. So these are the few 2, 3, 4, 5, 6 are the points where we can get the total cost of sales at a different level of their transactions. Then further it says that finance cost incurred in connection with utility shall not form part of cost of utility. Distribution cost of utility imputed shall not include in imputed, because actually cost has not been included. Where cost of utility is accounted as standard cost, the price variance related to utility shall be treated as a part of cost of utility, and the portion of usage variance due to normal reason shall be treated as part of the cost. Usage variance due to abnormal reason shall be treated as a part of abnormal cost. So point number 10 says if you have set any standard, and according to that you will have to identify the cost, and accordingly to that, if there is any variance with normal reason, they will absorb in cost of utility, and if due to abnormal reason, then that will be directly attributed or directly to be taken and adjusted in a P&L account. This point number 10 says any subsidy, grant, incentives. Point number 12 also says the cost of production and distribution of utility shall be determined based on the normal capacity or actual capacity utilization. Whichever is higher and unabsorbed cost, if any, shall be treated as abnormal cost. Cost of a standby utility shall include the committed cost of maintaining such a utility. Point number 12, cost accounting standard says on which basis cost should be absorbed, on the basis of normal capacity or actual capacity. If you before utilization, if you remember, we have already studied in this cost accounting standard 2. So whichever is higher, and after that also if any cost left, then we will consider it as abnormal cost, and that should be directly taken into a P&L account. And one more, cost of standby utility shall include committed cost of maintaining such utility. Fine. Any abnormal cost where it is material and quantifiable shall not form part of cost of utility. Penalties, damage paid to statutory auditors shall not form part of the cost of utilities. Credit recoveries, any changes in cost accounting principles. These are the assignment you can read. Presentation also, like utility cost shall be presented as a separate cost head, or any like separate cost statement should be prepared for utilities also. For cost of utility shall be classified as power purchase or generated. If they are purchased, and if they are generated, then we have to present that accordingly. We have to mention, include all the cost of utility consumed, quantity by individual consuming unit, or whether it is inter-unit company transfer, intercompany transfer, selling to outside party. It should be presentable. Disclosure also should be made, like same like a cost of utility to distribution cost based on their consuming centers, purchase, production, marketing, sale to outside parties. Standard cost is there, price and variance is there, inter-unit transfer, intercompany transfer, if there is any foreign exchange, any subsidy, credit recoveries, any abnormal cost, penalties. If there is any changes in accounting principles, that is cost accounting principle that is affecting to our current statement with reference to the last statement, we have to disclose it. And disclosure always should be maintained in the should be made in the body of the cost statement, or as a footnote, or a separate schedule. So this is the total cost accounting standard 8. In addition to that, I have taken one illustration for better understanding. So this says that higher pressure steam generated is first used for generation of power. So this is the boiler, the higher pressure steam is generated and is first used for the generation of power to steam turbine. And exhaust stream, leftover the steam, is the used for the process of sugar manufacturing. So note is there, to calculate the cost of power generated, credit for exhaust steam to be taken at 80% of the cost steam. What is this? And two separate cost sheet for steam and power required. Okay, they have said the statement of boiler and statement of power generation, the cost sheet should be required. So expenses of boiler we get to know easily from where we get the cost of steam. Then 100% of cost steam has been taken in the generation of the power. So in that addition to that, we have added expenses of steam turbine, from where we get total cost. Then net of less, they said that credit for exhaust steam to be taken at 80% of the cost steam. The credit of exhaust steam has been transferred to the manufacturing of sugar. So we have to less 80% of cost of steam, that is cost of, from net of that we'll get the cost of power total. So this is the total, two separate cost sheet have to be made, and then 80% of cost sheet should cost of stream should be taken in sugar manufacturing company, and their expenses of sugar mill serving where we get the total cost of the sugar. So this is the one small example I just made for better understanding as per cost accounting standard 8. So this is the cost accounting standard 8. We'll meet you soon with CAS 9, and till then, bye.